Welcome everybody, Doug McKay, antiwallstreetguy.com on the 15th of April 2011. As always, we're going to start off with a chart of the S&P 500 closed today at 1319.68. We had anticipated and we were hoping for, based on probabilities, the best probabilities is that we maintain a trading range basically between 1300 and 1340. We do have a double top here. That's certainly of concern. But basically where we're at is we're going to draw a line in the sand here at roughly around 1300, 1305. We break below that or much below that on a close, we are either going to exit our long positions tied to the S&P or hedge them. If we get a close above and we come out of this trading range and we get above this double top of 1340, the shorts are going to cover, they're going to get squeezed, and then technically this is going to pan out. Based on probabilities, we would be going higher in the S&P 500. So essentially subtract below 1300, add above 1340. So that's where we're at right now, but overall, again, we want to mirror this congestion here over to the right here to kind of fill out this inverted head and shoulders, all right, and then break above the neckline here of 1340. Let's take a look we've been talking about bonds for a while, how we stayed away from them in the managed accounts. This is a position we put on earlier in the week. This was a post that went out on the 13th on the blog where we broke above this declining sloping trend line here. We are also holding a long-term trend line going back to mid-February. You can see that this kind of was self-fulfilling in terms of the breakout, especially today on higher volume. We do anticipate a little bit of selling here at this top. We'll be running into a double top here shortly. We'd want to see it hold 108.50, certainly 108. All right, you can always get back in, but that is a small percentage, maybe 2% stop from our entry, actually even less than 2%. All right, so let's take a look. We've covered TIP. We covered the S&P 500. Let's take a look at USO. This is something that we own in the managed accounts. We had a breakout above this area. We also held this trend line here, and then we sold off very hard on an increase in volume Monday and Tuesday of this week. We never know hard right edge where this is going to go, up or down or sideways. So what I did is, while we do have this overhead supply here as of last Friday and certainly Monday, we hedged this, a percentage of this, with DUG, which is short oil. Now sometimes during the week, a couple days during the week, they were both up together. But until we basically get above this 45 level on USO, we're going to keep that hedge on with DUG. If this was to break down and we see possibly a breakdown of the low that we put in on Wednesday, and that low was 42.10, we're going to let this go and we're going to let DUG run. Okay, so that's where we're at with oil at this time. If we take a look at the OIH, you can see that this was a false breakout here. We are now below the 50-day moving average. Definitely have some overhead supply here. When we look at some of the oil stocks themselves, here's Exxon, stuck its head above the 50-day moving average today. This chart is still holding up, but I'd want to be out if it broke 81. All right, a couple stocks we're looking at where the chart looks decent, coming out of a base, almost a cup and handle, if you will, both on a daily and weekly chart. One of those would be McDonald's. Okay, so we've got an eye on McDonald's, and then we're also looking again at Oracle. Okay, that's a nice chart pattern there. All right, let's take a look at silver. We mentioned on the radio show and on the blog that we'd be selling the balance of our silver either at 40, at 35, whatever came first. We did not do that. Basically what we're going to do is we're going to let this trend line dictate when we sell. If we break the trend line and we break certain areas of support, which at this time would be 39, then we will exit silver. But for now, we're hanging on to it. When we take a look at gold, specifically GLD, what we were saying yesterday in the still chart is often a stock, an ETF, a position will come back In other words, it broke out above this level here, above this line. It will often come back down and test it. And that is either an opportunity to buy or to add. Now, if it hits it too many times, boom, 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 it's going to break through that support and go south. But for right now, it's holding up. I would want to see us hold this trend line, and I'd also, more importantly, want to see us hold support right around this 137.77 area. Okay, so that's kind of our stop around 137, 138 on GLD at this time. Some of the, let's take a look at the miners, GDX. We put this post out during the week. This overall chart right now looks good. It does not look as good as GLD, but the overall trend line is still good. And we are holding the 50-day moving average and support. I would be adding to it if it got above 64. I would be subtracting if it broke down through 58. All right. If we take a look at some of the silver individual positions that you can get into, one would be PAS, Pan American Silver. Again, it held the 50-day moving average today, but I would probably not be putting new money into this until we got above this high over here, roughly of around 40.50 on that. All right. Let's take a look at the financials. These are breaking down. They continue to break down or look weak with overhead supply. We're below the 50-day moving average here, which is this blue line. That's roughly around 16, let's call it 1658. We are below this left shoulder over here. If we were to look at this as a head and shoulders, we could say that this is a head, this is a shoulder. We really need to get basically above 1675, in my opinion, to get long the XLF. If you're in it, I would want to make sure that it holds 16, certainly the low in this candle here. If we take a look at some of the financials, let's just start out with Goldman Sachs. Again, we always say anytime something closes below the 50-day and then support, that is a reason to get out. So this continues to look weak. If we were to draw in a downward sloping trend line, this is still trading below it. Let's take a look at B of A. I believe that looks the same. Again, you're below the 50-day moving average. You're below support back here. That would have been a signal to exit around 1382. We're a buck lower at 1282, which from a percentage standpoint is quite a bit. Obviously, it's sold off on heavy volume today. So do not try to catch a falling knife. Let's take a look at Citigroup. Same thing here, testing support in the 442, 440 range. So the only thing we're looking at right now with anything remotely tied to bonds is TIP. S&P 500, the overall trend right now in equities is long. If we break 1300 on a close, I would be concerned. Oil, we're keeping an eye on. We have kind of a hedge on that. Looking at McDonald's, looking at Oracle. Metals look good, but not necessarily some of the individual mining stocks. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. Thanks for visiting the blog and listening to the show for the 15th of April, 2011. We'll see you next week.